Welcome back. Well, as promised, we told you all about the top 10 stocks that we are tracking. Now let's get into some more fundamental analysis. To help us out, we have Sid Khemka, who joins us. Hi, Sid. Good morning. Well, tech stocks, they should do well to start off trade with. But I'll tell you what, yesterday, if you looked at the index, a couple of stocks were already seeing a good amount of long build-up and some delivery-based buying as well. But what's your view on the stocks? Because you have the index that's underperformed in the last few days. You have the rupee that's weakened, which is the tailwind. And Accenture's numbers should be good times as well. What do you like from the tech space?
Yeah, good morning, Nigel. Glad to be on the show. So I think, yes, there were some concerns, especially after the Fed commentary, that the interest rate cut may not be at that pace. And hence, there were some concerns with regard to the spending going forward for IT. But I think overall, we are constructive on the technology space. We believe recovery will happen at a much faster pace. And I think the only want to show that the recovery is picking up pace. The overall performance has been good in terms of revenue growth. It has been at the higher end of the guidance. And the good part is that there is an improving demand environment with clients remaining committed to large-scale transformation.
Yeah, Siddharth, we'll come back to you in just a bit. For the time being, we'll just get the bit of that audio glitch sorted.
Absolutely. Let's go back to Siddhartha Khemka now, get in some fundamental cues and ideas. Siddhartha, I hope we can now, hear you better. So let's go back and, complete that point that you were making on IT. Accenture's numbers are good, but the question is, can we extrapolate that? And should we assume that at least there'll be a bit of an uptrade on some of the IT names?
Yeah, good morning. Sorry for that audio issue. I think if you look at the overall Accenture numbers, I think that's a positive read-through for Indian companies, especially if you look at the guidance upgrade. That definitely underscores the improving backdrop for Indian IT players. The quarterly numbers have been pretty good in terms of the revenue performance has been at the upper end of the guidance. What we are also seeing is that the clients remain committed to large-scale transformation initiatives. Which is where we believe that Indian companies, especially the larger tier 1 players, are well positioned to capitalize on the recovery in the overall growth. Also the fact that Gen AI continues to gain traction and some of the data infrastructure building up that players like HCL Tech are geared to benefit. So I think overall, the environment looks conducive, especially for the tier 1 players where we are more constructive, while the tier 2 players have reported strong growth and continue to do well. I think from here on, the major read-through from Accenture would be that we should also, a constructive view can be created for the large cap IT names. For example, what we like, HCL Tech is our preferred pick within the overall space, followed by a TCS and an Infosys.
Siddharth, thanks for waiting. First of all, I believe we fixed that issue, that audio issue. Lots of movers, Siddharth, and so just a few names. I don't know if you'll have coverage, but and these are all maybe at the margin, turn stocks, right? So Chennai Petro made a move yesterday. We were discussing this technically yesterday with a guest. IOL Pharma was started to turn a little bit at the margin. These smaller EMS companies, Avalon, Centum. Centum, of course, has done very well lately. Any thoughts if you own any of them or have tracked it?
Yeah, sure. Thanks, Prashant. So basically, if you look at some of these names, you have to see the space and sector where they are. And for example, Chennai Petro, we are seeing that the GRMs have improved sequentially on a Q1Q basis. Plus, we are seeing that the EBITDA margins for some of these oil refining companies could see a significant jump, almost 60% EBITDA jump on a sequential basis, mainly on back of the improvement in both GRMs as well as the marketing margins. And that is leading to the interest in this space. So while we have coverage on the larger ones, we like HPCL, which is a preferred pick within the entire OMCs. Chennai Petro being the small size, we are seeing consistently last 15-20 days in this market environment where while Nifty has moved up and then last 2 days we saw the struggle. mid cap and small caps has consistently seen a good uptick and a lot of interest despite the FI's sellout. I think mid and small cap space is consistently doing well. So the other space you talked about, Avalon, we do have coverage and we like the stock. EMS as a space is doing well consistently. So if you look also at some of the larger ones like the likes of Keynes, Sirma, I think they have also delivered returns in the last few days on back of investor interest. But the overall space, the electronics manufacturing, I think that is witnessing significant uptick in terms of growth, and the earnings delivery is something that is driving demand for stocks in this space.
Okay. All right, Siddharth, thanks for being with us today. You have a good Friday, and I look forward to connecting again. In case we don't speak till the end of the year, then happy holidays, but we'll probably will talk again before the year goes out.